Hey guys, Akil Stokes here. Welcome back to another weekend trading edge video. If you guys are brand new to the channel, this is a video I do each and every week where I walk you through the markets and share a few of the top trading opportunities that are on my radar for the week ahead, along with some helpful tips that will help you become a better trader. Now, I say I do this every week, but I apologize because I did not do this last week. Unfortunately, I was hit with the annual Stokes Family Plague, where we all go down very, very quickly, and combine that with a workshop week, and I just did not have the voice to do anything. So I apologize for that. But to make up for it, I am going to come back this week and deliver you more opportunities than you've ever seen before in this video. I hope we get to them all, but I plan on looking at all of these. Now, before we hop in, two things. One important, one just shameless. We'll start with the shameless thing. If you're not subscribed to the channel, do me a favor, subscribe to the channel right now. You love the videos, you love the content, you love all the daily short tip videos that I put out. So subscribe. That way the YouTube algorithm knows to send you more of these things that you enjoy. Hit that like button while you're at it. Two, the more important thing is we are going to enter a new trading month this week. And typically at the beginning of the month, right, the first week, we have our big bad jobs report. We call it the non-farm payroll. It's a U.S. jobs report where we come out with all types of employment and unemployment numbers, and the market gets wild and scary. Now, just to remind you, because of that government shutdown thing that we had that brought terror to the U.S. for about 41 days, we are a little bit behind on our numbers. So we actually won't be having that jobs report this Friday. That jobs report and the previous month's jobs report are going to be combined and released the next Tuesday. That should be December 16th. So if you're someone that usually avoids the market on that first Friday, there's no need to avoid the market, and you can stop all the fun things that you planned on doing Friday and sit in front of your chart looking for opportunities. Yay. All right, so let's get stuck in. We're going to start here on the pound dollar. And I was talking to a trader about this on the platform earlier this week. And this is a interesting situation because on the daily chart, we do not have a pattern formation, but on a lower time frame, we do. And this is going to be a good lesson on kind of the discretion and subjectivity that goes into identifying an anchor or an impulse leg. There's actually a cool little classic chart pattern within this pattern, which makes this opportunity even cooler, which is why I have it number one on my list. But if I were to look at this and draw out the ebbs and flows of a pattern, I would start at this leg right here. This swing high to this swing low would be my X to A. And this first retracement would be my A to B. My next step is I want to bring out my Fibonacci retracement tool, and I want to measure the depth of this retracement. And for me, right, I would need a 50% Fibonacci retracement level to get hit in order for this to be a valid bat pattern. And you can see that it does not get hit. Therefore, it is not a valid bat pattern. It is nothing. I can do this little cool thing on my chart where I hit the right button, right mouse button, and I remove all drawing tools and I start over. But if we looked at this from a slightly different perspective, right, going down to the 4-hour chart, I'm going to pause real quick because I want to make sure I'm actually sharing my screen. I'm back, and yes, I was, and believe it or not, I've done full videos, like half-an-hour videos where I haven't shared the thing that I wanted to share or had my mic on mute, and it is the most discouraging thing in the world. So always safe to double check. But as I was saying, if we look at this from a slightly different perspective on the 4-hour chart, my opinion on that initial X to A leg changes, right? Instead of starting from this swing high to this swing low, I actually see this swing high, right? If I measure out these ebbs and flows, right, we kind of come down a little bit and we do this little bounce right here. I actually see this as being a legit starting point in its own right. And why this makes a difference is because if I go back to my Fibonacci retracement tool and I draw it on from the swing high to the swing low, we now actually hit that 50% retracement, which puts me on alert for a bat pattern. So we're looking at a potential advanced pattern formation that looks like this: X to A to B, B to C, and a CD completion right here at our 886, or rather the zone between our 886 and our X leg. And we would be looking at that as a potential bearish situation. For you guys that saw the video that I did on volume profile, I'm going to try to show a lot of examples in here just to kind of follow up on that video. Here's an example where we can use our volume profile tool and we can kind of get a little bit of confirmation, hopefully. Yeah, there we go, right in that level. You can see we're currently trading. We have a little bit of a void right here. We'll talk about that later. And then our volume picks up pretty much right below that 886 zone. So that's a good news for our pattern, unless it comes a few pips before and turns around, which would not be good news. It would be horrible, but that is trading. Now, I mentioned earlier we have a simple pattern forming within, or a classic pattern, I should say, forming within this advanced pattern. And that is going to be this move right here. If we take a look at our most recent swing up, and our little consolidation here, what we have is actually a flag pattern, a bullish flag pattern. And not only is it a bullish flag pattern, which means we would project it to go bullishly, right? But it is a bullish flag pattern that just broke and closed above a previous level of structure. So not only do we have a bullish bias from the bullish flag pattern, but we have a bullish bias from the break and close above structure. We already have a target zone or a zone of interest from the bat pattern and the volume spike. So if you are a flag trader, right, not only can you wait for the bat pattern, which is a completely separate thing in its own right, but you can also look to trade the potential breakout up to that level. And if you're someone that likes to get fancy, if you're living dangerously, you can, and it's within your rules, of course. Everything we do must be within your rules. That way it's a good trade. That should go known, but we have new viewers each and every week. We are rule-following traders here. Don't you guys worry. But you can also look to buy it in advance to here, stop and reverse, which would mean you automatically, not automatically, but you directly go from your buy order, take your profit, and turn around and sell it, and hopefully take more profit on the way down. So a really cool situation here, which is why I wanted to talk about it first, because I know that many of you guys don't stay for the entirety of the video, and you should, because I don't put these in any type of order usually. I just kind of go with how they lay on my chart, so you don't want to miss anything. Always stay. Next, we're heading over to the loonie, the dollar Canada, and we are going to follow up that potential advanced pattern formation with another potential advanced pattern formation, but another interesting one that may be able to be used in a different, more profitable type of way. So the last pattern we looked at was going to be a bat pattern. This is going to be a Gartley here on the daily. Same thing, I want to start off by identifying my impulse or my anchor leg, which is going to be our most recent swing low to swing high, in this case right here. Going to draw on my Fibonacci. This time you're going to see that instead of coming below a 50%, instead of coming to a 50%, we actually come to a 618, which puts me on alert for a different type of pattern formation. This one's going to be called a Gartley pattern. And we've come close to that completion point, but not quite there. So looking for this Gartley, and I'll draw on the wings in a little bit, to complete down in that red box. X to A to B, B to C, and a CD completion down here. This could be seen on the 4-hour as well. It's just a little bit choppier there, but I'll be looking at it on the 4-hour since that is my preferred trading time frame. Now, what is interesting about this is that this pattern, right, in general, when we're looking at advanced pattern formations, we're looking for really kind of short, quick moves, something that looks like that. If you're aggressive, something that looks like this. But every once in a while, we get a pattern formation that forms within a bigger continuation setup, and this might be one of them. It's a difficult one though, and I've got to do a little bit of research on Canada just to kind of see if there's any type of fundamental biases that I should pay attention to. But from a technical perspective, if we zoom out the chart, you can see that we've been in a short-term bullish trend, right? We were going up. But if I keep zooming out the chart, you're going to see that we maybe haven't been in a short-term bullish trend, and we've been in more of a little bit of consolidation. But if I zoom out even more, and by that I'm just going to go to the weekly, you can see that we're actually in a very interesting situation. We've been in this triangle type of pattern. It's not the greatest looking triangle in the world, but at the end of the day, we've had 3 equal highs, right? High, high, high. We have not been able to really break out from those highs. And although, right, this is not your traditional ascending triangle, because if I can get my thing over here, in an ascending triangle, we want to see a series of lower highs. We have higher lows, excuse me. We have a low right here, and then we have our second high, and then we have a lower low right there, which kills the whole thing. But after that, we do have this series of lower lows here. So it's an interesting situation here. If I had to just use my experience, I don't want to use the word guess because that just sounds dirty. If I had to use my experience based on this, I would have a more bullish bias than a bearish bias. Obviously, there's a lot of fundamental stuff going on in the background, which is why I need to do some research on that first. But I do think this is worth taking a shot on holding for a continuation trade. And that's what I'll be doing in my personal trading, right? Perfect time to say, disclaimer, don't follow what I do. We had some people do that during the workshop where we took a couple trades during the workshop and like someone followed it and then they lost right away. And they're like, oh man, this trade sucks. You're a loser. And Jason's like, well, I'm actually still in it. And then you fast forward 2 days later, that trade's actually working out really well in his favor. And that trader lost money because they got into a trade with no idea where stops and targets were, no idea why they actually got into the trade, just because someone said they were getting into a trade. And that is this week's edition of Dumb Things Traders Do to Lose Money, right? So I do like this for a continuation play again. I need to do some more research on it, but I will be looking to get involved in this pattern. I'm a pattern trader anyway, so I'll be involved, but using it to see if I can, I'm sorry for bouncing the charts all around, trying to find the best view for you, using it to see if I can take a little bit more out of this move and really come towards this, what is this 42 even to 42.5 level. I'm not that aggressive to look for a breakout of this bigger pattern formation, whatever you want to call it, but I definitely do think we can see a move to about 142s or 142.5. So keep an eye on that, guys. So let's take a break from the advanced patterns and go back to the simple patterns, right? And this is one that we taught in the workshop this past week. But before we start with that, let's start with some top-down analysis, because I always want to do top-down analysis to see where the market is trading at before I look for the actual thing. And a phrase I always use is the what is not more important than the where, which means we can study all these patterns, right? In the last Trading Coach podcast this morning, I put out one sharing with you a lot of technical books that share some really cool pattern formations. But in my opinion, the pattern formation is only as important as where it appears in the chart. And if that bearish pattern formation doesn't occur at an area that you expect the market to get bearish at, I think it's a dangerous situation that you're putting yourself in. And I say that from personal experience as someone who tried to trade every single AB equals CD pattern and every single double top, only to learn a very expensive lesson that was stupid. So don't be like me. Anyway, in this situation, we do have the what and the where lining up. And if we just look at the highs of the New Zealand yen right here, and I just draw a horizontal line right at these highs and look left, structure leaves clues. That's the thing we say here on the channel, right? My mentor taught me that, and it stays with me forever. You're going to see that we are right at the previous highs looking left back in, January 2025. So knowing that we are at a level in the market that I could look for shorts because we have structure there, that makes this even more appealing. And this is going to be a double top. Check your data because it literally hits by the pip. But what we have here is price action rallying up. If I can get my line drawing tool, rallying up. We have a brief retracement, boop, 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 boop. And then we rally up for the retest and we hold right at the highs. And you can't get a better entry than this. It is scary because it is at the very, very top. But it also is going to give you the best possible risk reward because it is at the very, very top. Now, obviously, we've had a candle print after it. So if you got it at market, you'd be a little bit lower, but it's still a pretty decent opportunity. And if you want to add some things to this double top, right, not only do we have double top, and this is called building your case for entry, but if you look at the bottom of your screen here, we have the RSI massively overbought on the initial top. So RSI overbought. And then we have what's called divergence, right? So price action is putting in equal/higher highs here, or RSI is putting in lower highs there. So this is going to be RSI, divergence, three things. Oh yeah, structure, the most important thing that I mentioned earlier. Yeah, four things here building a case for entry. You can see how that is much better than just saying, ooh, a double top. Let's trade you and see what happens. So good double top here. Now the question is, if we take this double top, where are you looking for targets at? I think a good target level is going to be right in here. I'm going to kind of draw this backwards if I can. Here we go. These little tweezer bottoms right here is a nice little pregnant pause in the market. If we zoom out to the left, you're going to see previous structure there as well. If we zoom out to the left, you're going to see previous structure there as well, right? Pretty decent level. I haven't done this yet, but it looks like a 382 Fibonacci retracement. Please be right so I can look cool in front of all my video peeps. Come on. Come on. I feel like I'm wrong now. I'm doubting myself. I'm doubting myself. I'm doubting myself. Never doubt me, Akil. Never doubt me as I talk to me, because yeah, I should have more confidence in myself. But this is always fun to me. I love doing these videos live. I don't like kind of pre-doing these things and showing you stuff I already did. I kind of like having the general idea and then like doing analysis. I still get so much joy out of trading. Analysis is fun to me. I hope you guys can see that. One more thing, I'm probably getting greedy here, but I would be curious to see what the volume looks like. And again, this goes back on the volume profile video that we did last week. Let's just take it from the swing low to swing high, and haha, look at that. Nice little volume spike here. You got a bunch to get through right here, don't get me wrong, and there's no surprise that we do have it here because of the consolidation. But if we do get through this level, again, this just looks like a nice place to look for targets at. So I would say if you want to be more conservative, shoot for the low. I don't like shooting for lows, but maybe right here, 89.05, the lows of this little doji pin bar, along with an even handled number. But aside from that, right down here should be a good area to take it. So you should be able to get a good risk reward here. Let's just measure this out real quick. What is our ATR? ATR is, camera's in the way, 27. So let's take the high of this candle. By the way, this is how you do ATR stops for you guys that are asking. 89.63 plus 27 is going to be 80. It's going to be 90. So 89.90 would be a 1 ATR stop. So that means a stop loss would go right there. Let's grab our risk reward profile tool from somewhere on the side here. And I'll show you what it originally looked like. This is going to be a lot better than what we have now. But originally that looked like a pretty darn good risk reward right there. Ooh, baby, 3-to-1 pretty much. If you enter that market on the open, it's going to be a little bit less, 89.90. But you should still be able to maintain, 1.5 to 1 risk reward. So decent opportunity here on the Kiwi yen. Next up, we're going to hit the metals, silver and then gold. And silver has been rallying. Speaking of double tops, we had a nice double top right here that busted right through as silver, sorry, a little accent coming out there, as silver has rallied to end the week. Now, here's my warning to you, right? You're going to read all the headlines if you do anything this weekend about silver at high, safe haven, blah, 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 blah. There's other fundamental stuff that's going on with silver that makes it popular, a little bit more popular than gold, in my opinion. But I have another rule that you should follow. 3 magic words. Don't be late, right? Don't be late. You may want to buy silver. But the question is the timing right? Is this the right time to buy silver as it closed to end the week on a very strong bullish candle right at an even handled number of 56, or right below that 56, or right above that 56, excuse me. And my answer would be no. So instead of buying right now at the highs, because what happens is people come into the market and Monday they get all excited and they'll buy, and this thing will go like that, and they'll get pissed off, and then they'll sell, right? Sell, and then they'll rally up and go like that, and they'll get pissed off again. Save yourself some pissed offness, right? That's a funny word, right? And just wait for the pullback, right? Wait for one of two things to happen here, right? One, wait to see if we consolidate sideways and we put in some type of a high and tight flag pattern, because this would be a bullish continuation sign. So that's a much safer place of getting involved as you wait for the next breakout. Or wait for the relief. Instead of buying at the most expensive price ever, wait until it falls back down and then look for opportunities to buy at a cheaper level and get involved. I know the Temptation is there to do so. The FOMO is real. You don't want to miss out. You don't want to miss out. What if it rallies up? What if it rallies up? What if it rallies up and you miss it? I have an answer for you. Then you miss it. Here's the secret. I want to zoom out on this chart from the daily, and I want you to look at all the times price has rallied up, right? It retraces. At some point, it will retrace, right? So just wait for that retracement. It may not be the cheapest spot possible, but you are going to save yourself some risk of buying right here, watching the market come right here, and then regretting that you didn't have a chance to buy right there for the cheap. So that's my opinion. Just keep an eye on it. Be patient. Wait to see if we get some relief to start next week. Now, gold, my friends, is in a slightly different situation. You got to hear me out on this, because although I am bullish silver, I'm going to share with you a bearish trading opportunity on gold, but I promise it will make sense. Now, you see silver rallying. One would think that gold would rally too. Again, there is the safe havenness of the metals, but from a fundamental reason, silver does have some benefits over gold. So just like some supply and demand stuff that has to do with silver and stuff that's made out of silver. So just keep that in mind. It is a little bit of a different story. But here on gold, we have another advanced pattern formation. I'm going to show you this. I'm going to explain to you why I can have differences of opinions here that actually end up being very similar opinions. So I drew you guys out a Gartley before. I'm going to do it again here, right? We have, and sorry, I'm trying to do all this first to make the video short. X to A to B, B to C, and a CD right here. Let me just double check to make sure this hits the 618. I think it does. It should. Okay, there we go. Always good to double check, Akil. So a CDD completion right here. So what I would be looking for in a bearish Gartley is for price action to come to this zone and look for a selling opportunity here. Now, you said wait for a buying opportunity on silver. Here's why this is a little bit different, right? So silver ended with a pretty hot streak to end the week, and it would not surprise me if we saw gold follow as well. I know it seems weird, but it happens. Just look at your charts historically. If we are going to get a little bit of a bullish push on gold, that's actually exactly what we need to push us to this level. If silver is then going to give us some relief, which we may have in a pullback on silver, and then gold follows that relief pattern right at the highs, a place where people would probably look to take some profit off, then that is exactly the move that we would want to see in this advanced pattern formation before it does whatever the hell it wants to do after that. Probably go up. Who knows? We'll see what happens when all these magical numbers come out. But it weirds people out sometimes to hear like, hey, bullish on this asset and bearish on this asset when they're supposed to be correlated. But if you really understand how the market moves, you can actually see that those type of moves can happen without really disrupting any longer term patterns. And as traders, we are not longer term pattern people. We are short term people who are looking for very short moves to get in and out of the market and then look for the next opportunity. Next, we're going to head to the Dow Jones. Now, we will get back to Forex pairs. I know you regulars are looking for Forex stuff, but I'm in the mood today, and there's lots out there in the market, and I just want to hit everyone, especially, again, coming off the workshop where we dealt with so many different traders from so many different kind of asset classes, and we were making the point that, hey, technical analysis is a powerful tool that allows you to be dangerous in any market. When I say any market, I mean any market. But here on the Dow, we've got some cool things happening, right? From a fundamental perspective, I think many of the AI fears that did exist for the last couple of weeks are gone, and we're going to see some more optimism in the market. That can certainly be a thing, which is positive for the Dow Jones. From a technical perspective, we just came off of a pregnant pause, and a pregnant pause is this little red guy right there, right? Bull candle, bull candle, bull candle, bull candle, little pregnant pause, and then another bull candle. And that's going to give us a pretty cool structure shelf here on the 4 hours as well. Now, overall, what I'm expecting is this. I expect price to come here. That is my $1 million analysis. I think price will come to our previous level of structure resistance because structure acts like a magnet and it pulls price towards it. Just like gravity, I've been watching so many space videos and I've got so many space related rants for you live room members once we get back. So watch out. You better be ready. But I'll save that for our live trading room. But look for a move up. So again, two ways. If you're a breakout trader, man, just buy it up and trade it up to that level. Hide stops below this shelf right here. That's a pretty safe place to put it, and you'll get a decent risk reward there. Or if you're more of a pullback trader, let's shift this arrow around. Wait for the pullback into that previous zone and then look to buy it on the way out. So nothing really fancy here. Consolidation, pregnant pause, look for buying opportunities from the Dow. All right, back to the Forex market and back to everyone's favorite pair, which I don't actually think is that great of a pair to trade, but it's popular, so we must always talk about the popular kid, Euro dollar. We actually have a pattern formation here that I do not trade, but it is my favorite. It's not the best word. It's the pattern that I understand the most, and it is going to be a potential butterfly pattern. So once again, broken record alert, we are measuring our impulse leg, which is going to be our swing high to swing low, and then we're going to measure our retracement right here. So if you're following the theme, the first pattern came to a 50%. That was a bat pattern. The second pattern came to a 618. That eliminated the bat and put us on alert for Gartley. This one comes to the 786, which eliminates the bat, eliminates the Gartley, and puts us in butterfly land, which is not a magical place full of butterflies in bright colors and trees that sprinkle candy and delicious treats upon you. No, it is an advanced pattern formation, but it would be a lot cooler if it were the other thing. That would be awesome, right? Dentists would love it. We'd have so many cavities. But what we have here is a butterfly pattern, and there's many different ways to trade butterfly patterns. I'll show you my way. Fibonacci extension, invert it, ooh, getting fancy on it, from the A leg back to the X leg and back down. And I'm looking for that 127, so this yellow guy right here. You can see if I look left, this 127 is going to come right at the highs of this previous structure. So if you're looking for like a protective point to place your stops, and I should draw the butterfly on first, but the stop loss placement on the butterfly is the thing that always weirds me out. I'm not drawing things well today, but you guys get where it is. You've got two levels, right? You've got this spike right here that you can hide stops above, or you have this next level of structure right here that you can hide stops above as well. So butterfly pattern with structure available for your stop losses. There you go. By the way, if you notice a little QR code in the bottom corner of your screen, that is a link to a free trading computer builders or buyers guide. Meaning if you're someone that is interested in understanding what do I need to put into a trading computer in order to have a top-notch trading computer, or if you're someone that says, hey, Akil, I don't want to know any of that stuff, but I just want to buy a trading computer or have one built for me, custom built, like my beast, that is a link that will take you there. It'll give you all the knowledge you need to know, or you can just buy one. And I think you get some sort of discount if you use that link. So check it out if you're interested in that sort of thing. That is my shameless plug for the day. I don't nearly do it enough, but I'm really bad at that type of stuff. Something I am good at, however, is technical analysis. And I've got some more technical analysis for you here on the Euro New Zealand. Now, from a first glance perspective, right? First impression, this is not looking like a very bullish sign here. We had a high momentum bullish candle followed by an inside bar, followed by a weak bullish candle. Good job if you guys remember that. Followed by a bearish engulfing candle. Everything that says bad. But let's do our little trick where we take our horizontal line tool and we draw it here, and then we zoom out and we look left. I'm on a weekly, by the way, and we ask ourselves, where am I at? And I look left back to the magical year of 2009. Oh, this is right when I became a consistently profitable trader. Good memories here, bad memories, everything before that. Bad, right? But good memories here. You can see that although we are in a level of structure, we are nowhere near like the highs or the extreme of that level of structure. And in fact, if price is going to come up to test this level of structure, I would expect at least a test of the highest close right here. So when we go back down to our chart, you can see that we still actually have some room to go higher on the Euro New Zealand here. And what we've just had is a pullback, right? Price has been in a very bullish trend, right? Swing low to swing high, outside return, new structure high, outside return, new structure high. Had a little bit of a rising channel here equipped with divergence, right? No surprised that we saw some relief. That's what we'd expect. And what we would expect after that is a retest of our previous outside return right here, a hold if we're going to remain in this bullish trend, and a continuation up. So if you are a continuation trader, this is the exact pullback that you're looking for. Obviously, you're waiting for your reason for entry. You're not just blindly buying right here, but you're waiting for price action to give you a clue that what you predict is going to happen is more likely to happen than not. That's how we properly exploit and extract our edge from the market. But really cool pullback opportunity here. You've got some hidden divergence as well for you guys that like looking at the other side of the RSI and making yourself go crazy. You can see that we currently have higher lows, but we have lower lows in our RSI. This is the opposite of the first divergence I showed you called hidden divergence. If you know, you know. If you don't know, don't worry about it because it's really going to mess with your eyes. I'm not joking. It's weird. But it is a positive sign that we can use with continuation trading. Also, if you wanted some help with targets or some more confluence for targets, right, we can take our Fibonacci extension tool, drag it from the swing low right here, our previous outside return, to the very swing high right here. Bring that bad boy back down. You're going to see that we have two levels that I would want to pay attention to. A conservative one would be the 127 extension that comes right here. The more aggressive one would be, sorry, I had a little burp that was hidden in there. Probably shouldn't have told you that. You didn't need to know that. The second one would be the 1618 Fibonacci extension up there, right near the highs of that structure level. So good stuff. All right, we're getting towards the end here, I promise. We're going to be on Kiwi dollar. And if Kiwi looks familiar, it's probably because there was a point in the year about a month ago where we looked at it every single week for like 4 or 5 straight weeks when we were back up in this area after we broke these lows and we said price is likely to come down to this level next. And I'm just going to sit here like this because it did. And I knew it would. I didn't know it would. I predicted it would. You never want to say you know what the market's going to do, right? Because then the market punishes you. I don't want any karma, market. I'm sorry. Where's my I don't have my sage with me, but I'm scenting my charts for good luck, whatever it may be. But anyway, we've come to the level that we expected to come to. We bounced off that level. And then we did something very interesting. We violated our bearish trend, right? So we had here, we came here, right? New structure low, outside return, new structure low, outside return, new structure low. Everything's going the way it's supposed to go. And then this happens. Boom. We break and close above our previous outside return, violating that bearish trend. Bear be gone. You guys can't see. Oh, you can see it. Yes, bear be gone, right? So next is the question, okay, well, what do we think is going to happen next? Well, we don't have the 3-point move, so we can't predict a bullish trend with any certainty, but we can predict that, hey, if price is going to go bullishly, give me a second. Night, buddy. Hang in there, Akil. You got this. You got this voice. Right, you guys remember that? From this guy, Wolf of Wall Street. Yeah. Book is better than the movie, by the way, if you guys never read it. Forgot what I was talking about. Pounding my chest, coughing, saying goodnight to kids. Oh yeah. If we predict where price action is likely to do next, that's what happens when you're 30 minutes into a video. I would say that we're likely to retest our previous outside return, our next highs right here. So let's dive down to a lower time frame and see what's happening here, right? Remember we spoke about divergence on whatever that last pair we looked at where price was making something. In this case, it's making higher highs, right, and higher lows, but our RSI is making lower lows and lower highs, right? I would expect some relief from this move as well. And if we get that relief, it could be an opportunity to play the next bullish move up. Now, where's that relief going to come to? I don't know, right? I know that's not professional. I'm here each and every week to tell you the things that I do know. But the truth is we don't know. We never know what the market's going to do, right? Rule number 1 is that the market will do whatever it wants whenever it wants to do it. That was blunt, okay? But two places, if it were to do the thing that I think it might do if it wanted to do it, would be here. One, a retest of this level right here, or two, a retest of this level right here. So if I go one more time frame down to my intraday kind of trading time frame, imagine I'm looking at this on a Monday, I would see if price action were interested in not only coming to this level, right, this little high and tight flag that it put in this sideways movement, but holding this level, once again, waiting for my reason for entry. And if it does, it's an excellent chance to look for that move up. Why? Because what's your risk, right? If you're getting long at this area, somewhere down here, let's presume, right? Your stop loss is only below the level that you would assume you'd be wrong at, right? So you're risking a little bit there for a lot more here. It makes sense to do. And if you fail, right, because it happens, or you fail, you lose. Okay, what do I do if I fail, right? Well, you just wait for the next opportunity and do it again, right? It's trading. That's part of the plan, especially if you're going to be a trend continuation trader. So I would be interested in seeing, it's a little bit more of a risky opportunity, which is why it's down on the list. But it could be a decent opportunity here on the Kiwi to take advantage of that next bump up to this higher level. Our penultimate pair is going to be the Aussie Kiwi, and this is going to be pretty simple. I don't have any really sophisticated analysis for you here. I'm just here to tell you we have another bat pattern, right? You should be familiar with this by now, right? This is going to be, I'll use this tool so you guys can see it, our X to A, swing low to swing high, our A to B, move into the 50% retracement. Our B to C right here, I drew it on wrong. I'm getting tired. Let's try it again. Our X to A right here. Repetition is key, guys. This is why we're doing it. A to B into our 50% retracement. B to C, and then a CD completion right down into this 886. Again, with the bat pattern, we're just looking for a small bump. Now that I mentioned this, I do see some other things that we can look at. I want to see what the overall trend here is on Aussie Kiwi. I'm not really familiar with this pair. Aside from that, I would assume it consolidates just knowing the two currencies. But let's actually see where we're at here. Are we in any relevant place? No, I think we're right at structure, so I don't think this is gonna be a trend continuation play like the other ones we looked at. Yeah, we're right at structure. No trend continuation play here. So not necessarily looking for this to be long. But I would say this may transform into something else, right? So let's say this plays out where price action pushes down to our level here. We rally up here. This would give us targets, right? At least first targets right at this level. What else? I'm going to quiz you guys as I mess around with trying to get my buttons to work. What else would we have? If this were to happen, what else would we have? Who can see it? I'm slowly going to draw on the answer, but I want you to try and get it first. Huh? If you said head and shoulders pattern, wrong. No, I'm kidding. You're right. You got it. Yeah, you got me. You're right. Head and shoulders pattern, right? This may be a head and shoulders pattern as well. Now, for the head and shoulders pattern to be validated, we're going to need a violation of the neckline. So that comes well in the future. But that is also something else that we may have because, again, a head and shoulders pattern is a classic reversal pattern. It's a complex reversal pattern where a trend has ran out of steam. We know that we've come to a level of structure because we checked it out on the higher time frame. So it would be no surprise if a trend is coming to or running out of steam at a previous level of structure. We know that harmonic patterns, advanced pattern formations come in consolidation, right? So this would be consolidation. Yeah, this could end up being a head and shoulders as well. Now, it has nothing to do with the bat pattern, but it could be another future opportunity that you can look for on this pair. Lastly, we're going to take a look at the dollar yen. And this was going to be the main theme of last week's video before I got the plague. Because the week before, we did a mention of the dollar yen. And I got asked by a trader when I did the whole request thing, hey, we have violated the trend line. How has your view changed? And I'm actually short the dollar yen, full disclosure. It's done nothing, but I'll show you why I got short. But it's moved like 30 pips. It's done nothing. But just to recap, so although we drew in the trend line, I'm not a trend line trader. So I'm not saying there's anything wrong with trend lines, but they don't mean anything for me as far as my trading. So when asked if the violation of the trend line changed my opinion on the dollar yen, my answer was no, because we are still at what is important to me, which is our previous level of structure. Now, it's still a little bit dangerous because we have an overlapping level of structure right ahead of it, but we are still at a previous level of structure, so I'm still interested in that short opportunity. And what I saw this week on the daily was this. It was actually a pretty good coincidence because we were talking about, I was teaching at the mastery course 3-bar reversals, and we got a picture perfect 3-bar reversal here on the dollar yen within this level of structure, right? Bar number 1 did this, highest, that's not an arrow, Akil. Bar number 1 did this, high momentum bullish candle, right? Bull strength, bull strength, bull strength. Bar number 2 did this, right? Candle that closes in the middle third, indecision candle, having to think, right? And then we ended with an engulfing candle, a strong bearish candle, which gave us a good sign of bearish strength. And I entered right at the end of this candle, and price has done nothing since. I think it's gone like 70 pips in my favor max, and now it's floating above 34. But it was a nice little trade here. I was able to manage it a little bit thanks to the lower time frame ebbs and flows, which is good. So it reduced my risk drastically. I'm not quite at break even, but I'm in a place where I would feel a lot more comfortable taking a loss here. But the fact is, again, it still was a decent trading opportunity for me, because it came at that level of structure. So just want to recap that because I told you guys I would. I just didn't have the opportunity to do it because I was mute pretty much the entire week. Speaking of mute, I've spoken entirely too long today, so I'm going to mute myself. But if you enjoyed any bit of this entirely too long video, show your support by hitting that like button. It lets me know that these longer videos are things that you do like, because sometimes it's hit or miss. Some of you guys like the really, really long ones where we go into in-depth analysis on a lot of pairs. Some of you like to be in and out of here in 10 minutes. So I'm always trying to figure out what is the best for you guys. Or you can just leave me a comment below that says, hey, Akil, I like long videos, or I like short videos. You talk too much. Whatever it is, I'm numb at this point. I don't care. But I hope you guys enjoyed it. If you did, hit the like button, subscribe so you don't miss the next video. We got some really cool Trading Coach podcast episodes coming out. And until next time, plan your trade, trade your plan. Take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.